All right, welcome everyone. Thank you for joining us for another live class. Today we have a very special guest, so I'll be introducing her shortly. Welcome everyone. Drop in the chat where you're joining from. Let us know where you're representing tonight. We have a lot of Jamaican, Spanish, and we have a Bahama, Simone. Drop it in, let us know. We have persons coming in. Hi, Tisha, welcome, welcome. We are recording this session. It's gonna be emailed out in about 24 to 48 hours. So no worries there. You'll get all the good nuggets, the goodies. Make sure Winnipeg in the house, Toronto. Guys, you know the drill. Take out your money book, your money journal, get ready to write because we are sharing the things. Get ready, make sure you're taking lots of notes. We're all about knowledge, but knowledge is nothing without execution. So let's make sure we have our books ready, we have our money book out, and we are good to go. I see Charlene from our Learn Grow Investment.
Hi, Orville.
Orville is well connected in the streets.
Can't hide.
Yeah, hide Orville is well connected. Everything investing, he is there and making sure. All right, we have persons joining in, going. So let me introduce myself for persons who are new to this space. My name is Keisha Bailey. I am CEO and founder of Profit Jumpstarter. At Profit Jumpstarter, we teach you how to turn the money you have into the money you want by learning how to invest. And we talk about investing in stocks, we talk about emergency funds, we talk about cryptocurrencies, NFTs, the whole shebang. We talk about that. My aim is to make you wealthy. My aim is to show you how to grow wealth because I can do it very well. I've done it for myself. I've done it for many other persons. Now I am teaching you how to do the same thing for yourself and for your family. Money is what we are here for. We love money. We love growing it. We love making it. That's why we're here. I have invited Charlene today to drop into our live class. Charlene is a money coach. She's on Instagram, Charlene Money Coach. Please follow her. She is going to talk to us today about mindset. What mindset do we need to thrive in these uncertain times with all this market volatility? What exactly do we need to do from a mindset perspective? Because the mindset is critical, not just the strategy. I'm going to talk to you about the investing strategies, but your mind has to be right. You have to be in the right frame of mind. You have to know a certain way to approach this market and how to feel about today we're up, tomorrow we're down, today we're up, tomorrow we're down. We're losing. What should I do? What should I do? So without further ado, welcome, Charlene. Thank you so much for joining us today for our live class. Please share some more information with everyone here about the work that you do and your company. You're on mute. Yeah.
After 2 years, right?
Yeah.
Thank you so much, Keisha, for this opportunity. Good evening, everyone. And I am so thrilled and excited to be here to talk about money because it's one of my favorite things to talk about. I have been handling money one way or the other for the past 20 years because I am a chartered accountant by profession. But even though I am an accountant by profession, I was horrible with money. I had no concept of budgeting, of avoiding high interest rate debt, of saving, and worst of all, investing. And that led me to an unfortunate situation where I ended up in consumer debt to the tune of $22,000 US. It got to the point where the bank went into my account 1 month and withdrew all of the money that I owed them, that particular bank. It was one of many, and they left me with less than $100 on payday. That was my come to Jesus rock bottom moment. That happened about 10 years ago and I decided that something had to change, because even though I was earning a good salary, it was not reflected in my account. I got myself into shape. I started devouring everything related to personal finance, and I cleared off all of that debt in 15 months. And I have been consumer debt free ever since. Never looked back. Don't have any intention of going back, because I realized that debt is a master. And if you are not careful, the temptation is there to jump back into it. But if you have the right mindset, you can get out of it. So that has led me here today, being in the position to help women, particularly women, with their money, because I realize that so many women are powerhouses, are bosses within their own right, but for some reason are not, struggle with their money. So my passion and my purpose is to help women to thrive with their money, because I want to teach you that it is possible for you to experience financial freedom. It's not only for the rich, it's not only for a certain class of persons. Everybody has the ability to build wealth. So I am so thrilled to be here today sharing with you, especially on the topic about the long-term mindset that is needed, especially in these uncertain times. We thought the times were uncertain before with Corona. We are now in uncertain times with the stock market, because many of us have never lived through this period where there is hyperinflation, low interest rates, which are going up now, a pending world war, plus a volatile stock market. So now we need to adjust our minds, pivot accordingly, and ensure that we stay the course if we want to build wealth. So I'm only going to be talking for 10 minutes. And I'm going to share my screen. Please let me know if you can see this full screen. Keisha, can you give me a thumbs up if you can? Okay, great. So yes, I already talked about this, about myself, how I hit rock bottom, got sick and tired of being sick and tired, pulled myself out, and now I'm focusing on building wealth. Now, I'm taking this from a question and answer standpoint, and I have posed here 4 questions. It's going to be very short, but I'm going to ask you 4 questions that you should consider and ask yourself on your investing journey. If you are serious about building wealth, I want you to ask yourself these 4 questions when you become tempted to pull your money from the stock market, when you become tempted to not invest. I want you to ask yourself these 4 questions. And the first one is, have I educated myself on the history of similar market occurrences? Many of us are young. We've never lived through these kinds of volatility before, but believe you me, it's nothing new. There is nothing new under the sun. History repeats itself. So I want you to stop and go and do a bit of research. Look at previous bear markets. Look at previous situations where there were periods of inflation. Look at how the stock market occurred or performed during that time, and see what happened after. When you have done that, then you will be in a better position to realize that, hey, we have been here before. And if you take a long step back, you'll realize that the stock market actually keeps going up. Yes, there might be dips, but it actually keeps going up. When you take a long-term view, you see that the general trend is upward. So that's the first question I want you to ask yourself. Have I done the necessary research to look in the past to see what happened in periods in which the market is volatile as it is now? The second question I want you to ask yourself is, what is my why? Why exactly am I investing? Am I investing because it's popular, because it's a trend, because if I don't, I'll feel as if I'm missing out, FOMO. What exactly is my reason for investing? Is it because I want to build wealth? Is it because I want to accomplish my long-term goals much quicker than if I just save my money? Is it because I want to send my children to college debt-free? Your why will determine your mindset and your approach to investing. Because once you get clear on your why, you will become committed, you will become focused, and you will know exactly how to proceed in these uncertain times. When the market dips, you'll realize, okay, I don't need this money now, so therefore I can ride it out. I don't need to panic. I don't need to pull my money because I am investing for the long term. So question number 2, why am I investing? What's the reason I am investing? Third question I want you to ask yourself, who is in my network? Am I surrounded with a community of like-minded people? You see, it said that our network is our net worth. Because believe you me, if you are in within a set of friends, you have a set of friends who they are not educated, they are jittery, they don't know anything about the stock market, and they are probably just in it because it's trendy, you might be influenced by them to pull your money. You might be influenced by them to invest in risky investment products that you don't understand. But if you surround yourself with a community like Keisha's, Profit Jump Starters, where you are educated and you know that this is nothing new, this is nothing to freak out about, you are surrounding yourself with people who are on the same journey as you, who have the same mindset like you, then you'll be able to stay focused, you'll be able to stay disciplined, and you can stay the course. So number 3, check who is in your surroundings. Check your call log and see the top 5 persons who you call frequently. Check the persons who you typically message on WhatsApp or Telegram or wherever you hang out. Those persons need to be persons who support you on your long-term investing journey and not detract you from your purpose. And the 4th question I want you to ask yourself is, how exactly will I beat inflation? How will I build wealth if I pull my money now? If you can answer that question, then by all means, go ahead. But I bet you won't be able to beat inflation and to build wealth if you keep pulling your money every time the stock market dips. Because I'm sure you know, all of you here, you've been in Keisha's community for a while, you know about the power of compound interest. And you know that compound interest works better for you the longer you stay invested. So if you know that you cannot beat inflation by pulling your money, if you know that you cannot build wealth by sticking your money in the savings account or putting it under your bed or just spending it on whatever comes your way, if you know that you have to invest for the long term in order to get ahead of inflation, then my advice is to stay the course, stay calm, don't get jittery, don't panic, because it will all work out in the end. So to wrap it up, I want you to educate yourself. I want you to realize that by pulling your money before you need it will not help you to beat inflation. I want you to remember that compound interest gets more powerful the longer you stay invested. I want you to find a community of like-minded people and stick around them. And finally, if you don't need the money now, leave it alone. Thank you so much for allowing me to come and talk to you. If you want to reach me, contact me. You can find me mostly on Instagram at Charlene Money Coach. Thank you so much, Keisha.
Thank you. All right, so you see, if you're not using the money now, leave it alone. Thank you, Charlene. I'm gonna open up for some Q&A because we really have to tackle this, guys. We really have to make sure that we have the right mindset in this type of environment. Not any and any mindset will allow us to thrive. We are here to be wealthy. That is what we're all about. We all love money. Money team represent, you know you love money. We cannot afford to lose money. We're not going there. So if you don't need the money, leave it. Remember your why. I love this, Charlene. I love it. I hope everyone has really took notes and everyone will implement what you have said, because that is what it's all about. So let's take some questions. I can, if you raise your hand, I can unmute you as well. So let's take some questions. Live class, we're in the money class. So let us ask our teachers and go through. All right, Patrick, I'm gonna unmute you.
It's a quick question. It's something I'm curious about. It just came to me. All right, so the inflation was 9% last year, if I remember correctly. And most of the investment products that I'm seeing, like unit trusts or so on, are the rate of return is usually like 6%, 5% or so on. You know, if you invest in those for the long term, as you know, as we're always encouraged to do, and inflation still remains, for argument's sake, 9%, how would that really be beating inflation? Because if inflation remains higher than the rate of return that we're getting, if you understand what I'm asking.
Go ahead, Charlie. You want to answer? You're on mute.
I thought that was directed at you. So sorry. So if your investment products are not beating inflation, then you're losing money.
Getting
Simply
poorer.
Yes, simply put. So you need to find something, a pool of instruments, a pool of stocks, you know, that will pretty much give you a return that's greater than the 9.7% that inflation currently sits at in Jamaica. That's the simplest way to put it. You have to find something to beat inflation. So it would mean looking outside of the unit trust that you are probably considering, Patrick.
All right, I'll probably search hard because I don't see anything up for that, those high returns.
That's why you have Keisha to help you.
To show you the things. We're able to find them. Inside the money squad is where it's at. All day, every day, we're finding these types of investments. That's how you grow your wealth. Thank you, Patrick. All right, so let me open up. Rachel Muir, you can go ahead.
Hi, good night, everybody. Not sure if the question was asked before, but would you be able to say which investment products would be ideal that would make us make the money? I came on late, so yeah.
So we can't give financial advice because we're not financial advisors. By law, you need to be licensed to do that. But Charlene, I'm interested in hearing some of your picks that you personally would use for you. But Rachel, it's a personal decision. What Charlene do may not necessarily work for you. But
I'm very, very, very nervous about sharing my own portfolio because I don't want persons to think that it's investment advice. Yeah, so
we don't want no prison time.
No, I can't afford to lose my CPA license.
Right. So as the song says, prison on a bed of rose. We are not looking to go there, but that means we're going to talk about some strategies, Rachel. So just hold on for that. We're going to get into it, but we cannot give you advice. We're not licensed like that. We can talk about general strategies and then you form your own personal strategy. That works for you?
Definitely, definitely.
All right.
Thank you.
All right. All right, we have Kirky Ann.
Yes, everyone. Good night. Keisha, good night. Charlene, and again, good night to everyone. My question to you is, how how do you know what price you should buy a company at, or what is a fair price for you to buy a company? So in essence, you don't buy the company today and then tomorrow, the price, even though with the volatility, we know about that, but the price doesn't, go
Hold on
down.
you. That if that happened, we all would be on our own private island, sitting down very rich. Because if everybody knew when to call the button in a stock price, we all would be rich. Anybody who tell you they know to do it, run away from them very fast.
No,
Nobody knows how to.
but like, is there like a formula that maybe you can look at the company's balance sheet and you might say, I'm not really sure, but along that line.
Charlene can jump in from a CPA. This is what Charlene does. She looks at these statements.
So you have to do your research, right? It all boils down to you doing your research. So you look at the numbers themselves, and not only that, you look at information that's out in the public space about this particular company. You look at the plans that the company has for the next 6 months, 12 years, 1 year, 5 years, and you use that to make your decision. Not only that, you can consider doing, see, Orville here has it in the chat, dollar cost averaging. So you buy a stock, you have this particular company in mind. So you allocate a portion of your salary towards it this month. And then next month you go and you buy the same stock again. Whether the stock price has gone up or gone down, you continue buying that same stock until you meet your target. Your target might be in terms of units, or it might be in terms of a certain value or a certain amount that you want to have in that particular stock. But you just keep buying it because the cost is going to average out, so that whether you bought high or bought low, it all averages out in the end. So I'd say just do your research. There are many forms of research that you can do, and that's what Keisha teaches in her squad. Do your research and just keep buying. Dollar cost averaging, or DCA, is your friend.
Yes,
Hope that helps.
Yeah, so that's the first thing though, is you have to pick quality companies. You have to choose quality companies. We're not going to buy anything. Dollar cost averaging is a powerful strategy. It is powerful and it is simple. So that's why a lot of people probably don't realize that, simplicity is power. You keep buying this stock, but you're getting the ups and downs. You're catching all of them. So your average price is a nice, sweet price. But before, you have to make sure you buy a quality company. That's what we want to also make sure we're doing. We just buy a company and then realize, oh my God, the company gone bankrupt, shouldn't have bought it. It has to be quality. What is quality? We teach it. We look for companies with strong fundamentals. Look back to the money boot camp. We spoke about what companies to look for there. Anybody who was in money boot camp with the investing, you can drop the notes in the chat to help Kirkian. What do you look for? We look at criteria. We look at, all right, revenue, what needs to be happening? It needs to grow. We need a company to have a strong competitive advantage. We need profits to also be growing, because profit moves share price. If the profit ain't growing, the share price won't grow. So these are some of the things they look for. But Kirkian, thank you for coming into the money team here. You're gonna meet other people as well. Get their notes, find out how exactly does this thing go. What should they be looking out for? And then get to buy.
Sorry to interrupt again, Keisha. You made one more point. You look at profit, and profit will move the share price, right? And
Yes.
no, it's not investment advice, but just in the case of proven invest. I'm sorry. I'm sorry.
Don't worry, you guys always sneak it in.
What
This
you
is
said a
nothing,
while
but I just
ago, and I'm
want to
looking at
know.
proven, right? And based on the profit that they're recording, but we're really not seeing that reflected in the price. I know it's a side note to everything that you just said, and I don't. Okay, I'll just.
All right, so I'm going to teach you. Yes, the profit will move the share price, but there are other things that now come into play with trading. So the share price should move, but maybe there are things that happen now with the trading of the shares that result in you not seeing the price move. You also have different company strategies. You have external factors. A lot of things go into play. So that's why I was
Okay.
do your research. What do you do for the research? You have to come into the squad. Let us teach you. That's what we do in there. Give you that solid foundation so you know what to do.
Okay.
Yes, Kirkian. So I'm gonna open up at the end for persons to jump on the phone with me. I always do that because you know, knowledge is there. I want to make sure everybody is rich and wealthy. Two different things, but rich and wealthy. That's what we're here for. More questions from anybody? All right, we're going through. All right, so let us talk about the different strategies we'd be looking at now in this type of volatile market, because we still have to make money. We still are on our way to wealth. We need to be looking at various strategies. One of the main ones, Charlene and Orville touched on it already and you know, taught the things. You want to know, once you have found these quality companies, these great companies, you keep buying. It's called dollar cost averaging. You're going to catch the up the day when the market up, but you'll also catch the low when the day that the market falls. Over time, your average price is going to be somewhere in the middle, which is very attractive for you. It may seem scary that, well, you know, today, but open and lose money and all I've seen is red, red, red. I can't take the red. Dollar cost averaging will work out. This is where the mindset that Charlene talks about is important, because when you have that long-term mindset, when you answer those 4 questions, and what I would do is probably put up those 4 questions right in front of me. And every morning I ask myself, all right, 1, 2, 3, 4, and it helps to ground you. And you go on with your day. And you know then when you're investing, you're not investing based on emotions. And so you run and sell all of the stock, put your money under your mattress and you stay poor forever. We don't want that. Remember also, these are paper losses. They are unrealized. They only become real when you sell. So if you don't sell, they are not real. They fluctuate every day. And if you notice when you log in, you lose 50,000 today. Tomorrow, you lose only 25,000. And next day, you lose only 10,000. The numbers fluctuate. They only become real when you panic and sell. And the whole aim of this live class is to say, don't panic. And if you don't need the money, what Charlene said, leave it alone. Don't touch it. So dollar cost averaging is one of the first strategies you want to employ right now. You pick your solid quality companies and your dollar cost average. You keep buying. Next strategy, we want to look now at diversifying. We don't want the same, too much of the same at everything, because that's what will happen then is that when your portfolio is falling, everything falling at one time. We don't want that. We want to ease ourselves a bit. So we want a little bit of everything. Same like when we think about our plate, we have a little rice, a little vegetable, a little chicken, a little shrimp, a little fish, all of that. We want a nice, broadly diversified portfolio. Pick across different sectors. We spoke about the sectors that usually do well in this type of environment. We talk about financials. We talk about companies that can pass on inflation to their customers. Look for those types of companies. Do your research. Get them in your portfolio. Have a little bit of everything, right? So dollar cost average, diversify. Next thing we want to think of now is this is the time that I can start loading upon my long-term stocks that I want, because they cheat. No, when you think, hey, 10, 15, 20 years from now, are we still going to be experiencing a Russia-Ukraine crisis? No, some other crisis would have come around, probably 3, 4 crises by then, but things will be better. When you look at how the stock market moves, there are ebbs and flows, but it's still going up. When you know that long-term pattern, you smile to yourself and you say, wait, these people don't really realize that over the long term, the stock market always goes up. Why they're panicking? I don't know. I am out here having a nice sale day because some of these companies that I've waited the whole of 2020 to be able to buy are finally on sale. We are in the Black Friday of the stock market. So don't panic. For those who love a good sale, who love a big sale out and they're ready to see 25% off, 30% off, this is what is happening now. When you think long-term, you realize what is happening now is a blessing. You don't get these times very often. You get a lot of 2020 when everybody could have just closed their eye and make money in the stock market. That is easy. Anybody, you don't even have to know the first thing about investing. You just buy and you just You look tomorrow, you're making money. That's not how it works though. The market is more like this, where you get the ebbs and flows. You use the down days to say, wait, sell out, sell, let me get in. And you get in now at really attractive prices. And then you keep buying with dollar cost averaging. You diversify, and you already know, so Keisha, they teach you that you need to be looking for financials that do well with higher interest rate. We're looking for companies that can pass on inflation to the customers. We're looking for companies that are tied to the commodities, like oil prices going up. We want to find companies tied to oil. And we'll do that. When you do that, you will be wealthy if you are consistent and if you implement. You have to execute. Knowledge is nothing without execution. You have all the tools to be wealthy. Nobody can say, well, I don't know if you're doing them. No clue. You have all the tools you need to implement. Don't stay on the sidelines. Right? There's no money made on the sidelines, and the broke life is not a nice life. We want to be wealthy, so we have to take action. That's what we need to do. So let's open it up for some more questions. I said a handful. I know right there, people probably thinking in their mind, so one to this, one to that. Let us take some more questions that we can work through it. Anybody here struggling with their mindset? I know people are panicking. Who is panicking? Let us work through it. Who is waking up and seeing, oh, lose some money, lose some more money. What should I do? Now is the time. Let us work through this. I don't want you to panic and sell. All right, Tina, let's go. Or Tina.
It's Tina.
Tina, hi.
Tina. Hi. Thank you so much for sharing so far. All right, so quick question. I don't think you've mentioned it, but for example, I think my main brokerage account is with Sagicor. So for example, if I want to send money to that account, for example, for a particular stock, right? Is it that I have to go in the bank every single month, or I can set up something where I can actually just transfer the money to
standing order? Yeah, standing order. Nice.
Oh yeah.
Right? Yeah. Easy. With technology these days, we can automate our discipline. We don't need to rely on ourselves and trust ourselves. We automate the discipline, take ourselves out of the equation.
Is it recommended to have more than one brokerage account?
If you want.
If you want.
It's a personal decision, but if you want. I know people have 15 accounts. Any amount, it's up to you.
Okay, thank you.
Yes, all right. All right, Simone, let's go.
Hi, good night.
Hi.
So I about 2 years ago purchased into NPO with the intention of holding it for longer. I have since noticed that it has decreased about 2%. And I'm wondering, should I offload it and look for something else, or should I still keep that mindset of holding for that long term?
Arlene.
After such a long time.
How long did you say you have it for?
About 2 years now.
Is it a company that you believe in?
They seem to have the strong fundamentals, as is often spoken about. But just this particular, because they do have more than one instrument, or what we call it on the stock market. Just this one particular one.
And I think something in your background interfering. Can I hear you?
Sorry about that. Is that better?
Yes.
A little.
Right, sorry about that. Right, so I was saying that they seem to have other good instruments on the stock market, but just this one particular one just isn't showing any improvement.
So is it a stock that you own, or it's a unit trust?
Yes, stock.
The stock. All right. So if you are confident in this company, if you looked at the numbers, you did your research, you looked at what they have coming up in the future, and you know, or you assume, or you're confident that this company will do well eventually, maybe this is just a little bad turn that they're going through, then I'd say hold it, and if you have more money, buy more, because as Keisha just said, the stock is on sale. You're pretty much getting it at a discount now. So I would say buy more. If you think that it's not going to recover, then it's your decision as to what to do, whether to sell it and to use the money and buy into another company that you think will pay off dividends or pay profit or have capital gains in the future, or just leave it be and just use your current money to buy other stocks. And then what will eventually happen is you're holding in this so-called not so profitable company now, the percentage will decrease eventually.
Okay.
And yes, thank you,
Thanks very
Orville.
much.
Not financial advice.
Education, education, yes.
Okay.
All right, so we have another question that popped up. What are considered attractive prices? How many stocks would you recommend to purchase at those prices? Please give an example. So that's a unique question, Raquel, because attractive prices, it varies, right? Easy rule of thumb I look at sometimes is, all right, how much has the stock price fallen? If I still love this company, meaning nothing fundamentally gone wrong, they're not filing for bankruptcy, or they're having a problem with their strategy, like Facebook, for example. If something like that is happening, there is a reason why the price is falling. So in that case, well, you know, questionable things happening, not really for me right now, possibly. But if it's a strong fundamentally, the fundamentals are strong, price has fallen, this may be attractive. Some people wait for a 30 or 40% drop and then they say, yep, I'm going in, all in, let's go. Some people slightest drop their run and buy. Up to you. How many stocks would you recommend to purchase? Buy what you can afford, but start. Buy what you can afford and then start. All right, any other questions? We're in class is in session. Buy what you understand, Orville, yes. Everybody here, definitely, all right, so we have Ashley coming, okay. Go ahead, Ashley.
Hi, good night. I just had a question regarding the dollar cost averaging. Not sure if I got that strategy right. But my question is, the strategy is that you purchase the stock over time. Let's say, for example, on a monthly basis. Wouldn't it be better if you purchase, like, give your all into the stock, since it's the cheapest in the moment? Since, like, for example, if you have a strong company like Spurtree, for example, who is currently like through the roof
The way
right
you drop
now.
that in a strong company, can you wait and just people go and say, no, or yeah, no, all right.
I mean,
That's
just
your
for
view.
example,
Yes.
just for an example, wouldn't it be cheaper to put your all in the moment, like at the beginning, rather than constantly buying when the stock price is getting more expensive over time?
Arlene, give us some numbers first, the accounting way of it.
So my take on it is you can do it two ways. You can either keep, if you have, let's say, 5 stocks in your portfolio, right? You can keep buying the same 5 every month, or you could choose to buy 3 this month and 2 next month, 3 the other month, 2 the next month. It's just a numbers thing. You don't get too caught up in trying to get it exact and down to a science. It's just the principle behind it. If it's cheap or if it's on a discount, just buy more. That's just the premise we're trying to sell. It's not a matter of keep watching it every day to see when it has dipped to a certain point, because that's the mindset that I realize a lot of, especially new investors have. You obsess over the stock market, right? Every day you get up and you watch the market from 9 o'clock till it closes at 1 p.m. And that's not healthy. So I'd say just have your plan and stick to it. So if it's that you're gonna buy the same 5 every month and you have your percentage in your head, buy that. Or if you choose, you buy 3 this month, 2 the other month, and then just keep cycling that way. Don't get caught up in the mechanics too much.
Yeah, I agree with that, because better doing something than nothing. The driver of your wealth is the consistency, is not the, all right, I'm gonna buy and just go away now. You have a lot of people saying buy and hold, which is buy and put down and do nothing with ever. That's not how investing works. You get wealthy, you achieve wealth by consistency. We don't know for sure, actually, that Pertree's price will continue going to the moon. I don't know that. It will go up, down, up, down. The fact that you keep buying is what will build the wealth, not waiting for the perfect moment, because you only know that a price is low in hindsight, meaning the opportunity come and pass you. That's the only time you know. You can't know it before the time. We'd have a crystal ball, or else we all would be rich sitting on our private island. Only when you look back, you'll say, oh, that was the low price. So that's why, to avoid missing out, keep buying. So see Chantel telling you her experience with JMB, we have to be consistent. Make sure you're buying. That is the best thing you can do to be invested. All right, Ashley?
Yes, it sounds good. Thank you.
All right, Akeem, you are up.
Hi, Keisha and Charlene. I want to give you ladies my roses, as you're doing a great job in regards to helping females with financial independence or securing their financial bag. I want to be the devil's advocate here as I continue to listen to your podcast and see, Charlene did a great presentation. And talk about mutual funds. I realize a lot of this conversation is towards stocks, right? And I want to just get you guys to answer, in case someone is afraid to say it, the comparison of mutual funds compared to stocks. So for example, Sagicor has its Sigma funds, and NCB has its cap market, right? Specifically the funds part.
JMB has funds, Varita has funds, yeah.
Exactly. And I would sure that you ladies would know that the devil to all of those funds is fees, right? And from a famous book that I continue to read at least once a year by Tony Robbins, Money Master the Game.
Money Master the Game, that's my book. Yes.
Good. I've realized that he is a strong advocate on avoiding fees. And he has a statement in there. I have the book packed in a box. He mentioned in the book, why is it that I must take all the risk, give it to you as the bank, you hold my money, allow it to move, and then it gains, and then you take fees or profit, I would call it, from me taking all of the risk. So I just want you ladies to give your input on how you feel mutual funds. I mean, I'm not bashing any particular bank, but I believe in financial intelligence teaches us how to avoid these tricks, especially when you look at inflation where it is now. Then you top that on with a 1.7% fees that a cap market or a Sigma or a JMB or one of those banks might put on you, to show persons how going the way with stocks is a much more feasible way to safeguard your money. Just being a devil advocate here.
Devil advocate, look at you, Akeem. Well, all right, so I was a fund manager. I used to manage mutual funds and unit trusts. I managed over $100 billion Canadian in funds. So I know the thing. I did that for a long time and grew the funds, and I was paid very well to do that. No, I am not gonna say, well, no mutual fund, no. There is a role for them, because mutual funds, aka unit trusts, are ideal for the person who doesn't have the time or they don't really have the interest in doing it themselves. Mutual funds are done for you. Someone does the investments for you. So you have to pay them for it. You have to, because it's not you doing it, they're doing it for you. Now, the fees, yes, they can come into issue. So I do fee for performance. I can't be paying your fees and you're not giving me a good performance. That's what I use to measure. If a fund has top performance, I don't have no problem paying the fees, because you can do it and I couldn't do it for myself. If I know I can do it for myself, I will go on DIY. I'll learn how to invest in the stock market and do it for myself. It's the same types of investments. Stocks are in the unit trust, bonds are in the unit trust. You can buy them yourselves outside of the unit trust manager. It's whichever you pick. There will always be the person that say, you know, I just want to know my money is invested well. I don't have the time to do what is required to DIY. That person, get a unit trust. All I care is that you're doing something with your money. It's working. But make sure when you're paying the fees, you are paying for performance. You're not paying the fees and you get 0.1% return, but the fees are 2%. Make sure you're looking for that. I will gladly pay fees. If you're giving me 30-40% return a year, me pay you, because you know what you're doing. If you're not giving me performance, I'm not going to pay you. So that's how I look on it, because I was there and I gave performance, so I should be paid for that.
So would you classify yourself, Keisha, as a fiduciary then?
Yes, that's what. So I've stepped away from that world. You know, be fully independent. I don't care where anybody put their money, as long as they put it somewhere. The problem I have is if you say, you know, Keisha, I have 10 million in a savings account, then I said, no, we need to get to work. I care that you are doing something to create wealth. The choice of what you do is personal. What do you think, Charlene? What's your view on the unit trust versus DIY?
I believe it's a great place for new investors to start, because what tends to happen is many persons rush into the stock market not understanding exactly how it works, and then they lose money. So with a unit trust or mutual fund, or if you have access to the US market, you could try the index funds, the ETFs. You can actually rely on the expertise of the fund managers who pick the stocks, put in this pool, and then you buy into it. All I'd say is ensure that you read the, what do you call it again? Oh gosh, that one pager, the name is slipping me right now, that shows you exactly what's that?
Prospectus. The fund.
No, not the prospectus, just the little one sheet that tells you the top 10 holdings, the risk profile of the fund, and the returns over the past 3 months, 1 year, 5 years, as well as the fees. If you look at that, educate yourself as to what's going on with that fund, and you're comfortable with the returns, then by all means, go ahead while you are educating yourself on exactly how the stock market works. I don't bash unit trust. When I just started out, that's what I did. So I'm not gonna bash it.
All right, Akeem, thank you. I like that question. Thank you very much. All right, Simone, you are up.
Hello, you can hear me?
Yes.
Okay. So question, as a newbie, I'm trying to figure out, do you open a broker account or a trading account or a trader's account?
They're more or less the same. You
Okay.
just, so the question, some companies will call them brokerage accounts, some call them trading accounts. If you're doing the investing yourself, you would just simply go to the company and say, I want an account where I can buy stocks in there for myself. They call them different things. Some say, oh, a brokerage account, some say trading account, some say discount brokerage, some say direct brokerage, lots of different names, but the same thing, essentially.
Okay, thanks.
Yeah, the fact. All right, so we have some questions, some Q&A. Let me see what those are. We have, where can I buy US stocks? You can, a lot of the Jamaican brokers are now opening to that. I think on the Jamaica Stock Exchange later this year, you will be able to do that. So that's going to be exciting. In the meanwhile, you could go and open an account with TD Ameritrade, Robinhood, Interactive Brokers, and get started. So then we have, how does paying commission on brokerage account works? It's automatically done when you do your trades. It's already calculated into the trade. So nothing for you to do there. What's the difference between buying stock on JTrader Pro and buying through your broker platform? Just a different platform. What matters is that you buy the stock, please. That's what matters. But the platform, it doesn't matter. Same as some people may say, I have an account at Mayberry, I have a TD Ameritrade, I have a JMB, I have a Barita. It's just an account. What matters is what you do with the account, the money you're putting in it, the consistency with which you're putting money in the account. So don't get hung up on the type of account. Just make sure you're putting money in there. You're putting the money to work inside the account. Right.
Simone has her hand.
Simone, all right, Simone. Go ahead, Simone.
I guess I didn't take my hands down, sorry.
Oh, okay. So guys, we're coming up on time. Remember always the Money Squad is here. If you want to take your knowledge on investing to another level, if you say, yes, Keisha, I'm ready, this is it, wealth is for me, money is a must, money up for 2022 and beyond, join the Money Squad. Charlene, also share with persons how they can find you, if they need some help with mindset and working through that, and what are the specific services you provide.
Oh, so I am mostly active on Instagram, Charlene Money Coach. I post practically every day. And it turns out that I am actually having a free training this Friday at 1 p.m. Yes, on how to set money goals and crush them. Because I find that a lot of persons jump into investing, oh, I want to do better with my money this year, and haven't taken the time to identify exactly what that looks like. So that's coming up this Friday. If you go to my Instagram bio, click the link. It's the first link in my link tree. Sign up, it's free. If you can't make it live, there will be a replay, but you have to register in order to get the replay because I don't want to spam anyone.
Yeah, nice. So setting money goals is critical. It is critical because if we don't know what we're working towards, we're there just running around, as they say, like a no-head phone. So we have to have a clear purpose, a clear strategy on what we want to do with our money. We have one other question that came in. If I already contribute to pension through my work, do you recommend that young people make extra payments, young people make extra payments to their pension or other instruments? So when we think about pension, we have to think, in retirement, will my monthly pension be enough money to sustain the lifestyle I want? Is my monthly pension gonna be enough to sustain the lifestyle I want? Or is it that when I retire, I'm gonna be suddenly eating bread and water? If you find that the pension is not enough from your employer, you need to be doing your own independent investing. They're never gonna say this to you. It's every man for themselves, as the world is full like that. But we are here to tell you, make sure. So what you do, you go to your employer and say, what is my projected monthly pension? They all can answer you. What is my projected monthly pension? When they tell you that amount, if your face drop, if tears come to your eyes, you know you need to get started with doing your own independent investments. If they tell you a number and you smile and you say, whoop, that's good for me, then the pension alone will be sufficient. But you have to inform yourself, you have to arm yourself with knowledge so you can take action. So tomorrow, go and check that. Oh, guys, that's critical. Make sure you know your pension, your projected pension amounts. All right. Thank you, Arville. Yes. So this has been amazing, Charlene. Thank you so much for being here. I am also looking forward to Friday. Money goals, guys, is important. Make sure we're all here building each other, growing with each other. We all want to be wealthy. Gather as much knowledge as you can. That's what we need. When you're ready to take your investing to the next level and say, yep, I am ready to really learn the blueprint of investing to create wealth, hit me up in the Money Squad. Let me drop the link in the chat again. Hit me up there. We have live classes twice a week, just like this, where we're talking in more detail. We have tons of videos. We have a Slack group where we're talking all day throughout the day. We're looking at things happening in the stock market and translating that into investment strategies. So that's the place you need to be if you want to take things up a notch. Thank you, everyone. And thank you, Charlene, again. This was amazing, guys.
Thank you.
All right. See you on the next live class. Bye, guys.
Bye.